Renting versus buying. It might be the most debated question in personal finance right now in the housing market. And honestly, I think a lot of the content you're gonna find on this topic is either trying to scare you into buying, or it's gonna try to make you feel so good about staying in a rental. Now, what I want to do today is just lay out the real numbers, specifically for Oregon, and then give you a framework to make the decision that actually makes sense for your personal life. Because that answer looks different for everyone, and I'd rather you make the right call for your situation than feel pressured either way. So let's get into it. Hey everyone, Joe Skipper here with Skipper Realty Group. We serve the Portland, Metro, Wilsonville, Salem-Keizer areas of Oregon, and I want to be real with you up front. I'm a real estate agent, so you may expect me to say you need to buy, but that's not how I operate. I've had conversations with people where renting is generally the right move for them at that moment in their life, and I told them that. Today, I'm just gonna give you the facts on the table, share some Oregon-specific numbers, and help you think through this the right way. But let's start with the numbers that everyone asks about first, and that is, what is gonna be your monthly payment? So here's where things stand in the Portland Metro right now. With home prices sitting in the mid $500,000 range overall, monthly mortgage payments are typically coming in around $2,900 a month, depending on your financing and your interest rates, and depending on your down payment and credit score. That number could push closer to $3,500 or more. So when you're budgeting, I plan somewhere in that $2,900 to $3,500 range and get a real quote from a lender before you assume either end of that. Now on the rental side, it's pretty simple, but the median rent in Portland across all housing types, condos, single level houses, all that stuff is right around $1,795, which is actually 10% lower than the national average of $2,000 a month. So if you're doing the raw math, just raw, yes, renting is cheaper month to month right now in Oregon. That's just the reality, and anyone who tells you otherwise just really isn't being straight with you. So I'd rather give you the honest picture than tell you one way or another. But here's where people make the mistake of stopping the conversation too early. The monthly gap is only part of the story, and it's actually not even the most important part of the story. Now, Portland was listed as one of the top cities where renting is currently more affordable on a month-to-month basis. However, that same research noted that homeowners have 40 times more wealth than renters on average, mostly due to the equity growth in their home. So let's think about that for a second. Yes, you have a cheaper monthly payment, but dramatically less wealth on average over time. So how does that happen? That's what we actually need to talk about. This is the part of the conversation that most people never have, and it's the most important part of the conversation. According to NAR's 2025 analysis of the Federal Reserve data, the typical homeowner has a net worth of $430,000 compared to just $10,000 for the average renter. The average homeowner is 43 times wealthier than the typical renter. 43 times, not 43%, 43 times. And that gap has never been wider than now. Now, I'm not throwing that number out there to make you renters feel bad. That's generally not the point. The point is to understand why the gap exists so that you can make an informed decision about which side of you want to be on over the long run. Now here's the simple version. When you pay rent, that money is gone. Every single dollar. You got something in return, a place to live, but financially the transaction ends there. There's no asset, no equity, nothing that carries forward, except for the landlord. When you pay a mortgage, part of that payment goes toward interest, yes, but part of it is also going towards paying down your principal. You're literally buying more and more of your house every single month. And on top of that, your home is typically appreciating in value over the long period. Property owners have seen their wealth grow by an estimated 45% since 2019, while renters saw only a 36% increase. And renter net worth has actually stalled over the past 3 years. So there are two engines running simultaneously: equity from your payments and appreciation from the market. That's why the gap is so wide and why it keeps widening. That people miss when they look at the monthly payment difference. That gap just doesn't stay the same. Say for example, you lock in a fixed rate mortgage, your principal and interest payment is the same as year 1 as it is in year 20. Now, your property taxes and insurance are gonna tick up a little over time. I wanna be honest with you about that. But the core of your payment, the principal and the interest, that's locked. Meanwhile, your rent can go up every single year, and in Oregon, it typically does. Locking in a fixed rate mortgage means your monthly payment stays the same, unlike rent, which can rise unpredictably year to year. So let's say your rent is around $1,800 today, and in 5 years, that could easily be $2,100 or $2,200. In 10 years, even higher. Meanwhile, if you bought and locked in at today's rate, that core payment hasn't moved. The gap that currently favors renting, it shrinks over time. And depending on how long you stay, it can eventually flip, where buying becomes the cheaper monthly monthly option as well. So a mortgage payment might be the more expensive than rent right now, but in 20 years, it will be far lower because your payment is fixed and your neighbor's rent kept climbing. That's not an opinion, that's just math. Now, and I wanna be really clear here, there are genuinely good reasons for renting, and I don't wanna gloss over them because for some of you watching this, renting right now is absolutely the right move, and stay there. First, if you're not staying put, if you plan to live somewhere for fewer than 3 years, renting almost always makes more sense. Buying and selling a home comes with significant upfront and transaction costs, typically around 5 to 8% of the home's value when you sell. If you're buying in the Portland area and moving 2 years later, you may not have built enough equity or seen enough appreciation to cover those costs. So for short timelines, renting wins. If your finances aren't in the right place yet, buying makes more sense if you can comfortably cover a down payment, closing costs, and emergency savings without stretching your budget too thin. If getting to the down payment wipes out every dollar you have, that's really a vulnerable position to be in as a new homeowner. Get the foundation right first, then you can look to buy. If your life is in flux, job uncertainty, a possible relocation, a major life transition, renting is ideal for those who aren't sure where they want to live long term and don't want to hassle with the maintenance and would rather have lower monthly payments. There is real value in flexibility, and owning a home ties you to the place in a way that renting simply doesn't. In certain seasons of life, that's genuinely a downside to buying. So please hear me. If any of these situations sound like you right now, renting may be the smarter play, and that is totally fine. But how do you actually decide? Here's a simple framework that I'd give anyone in the Oregon market right now. Are you planning to stay at least 5 years? If you plan to stay at least 5 to 7 years, those transaction costs are easier to recover and buying starts to look more attractive. If you're not sure you're gonna be here that long, renting is likely the smarter call. Can you cover the down payments, closing costs, and still have reserves left over? If yes, you're financially in a position to consider buying. If getting there wipes you out completely, build the cushion first before you think about it. Is your income stable? Lenders want to see consistency. It doesn't have to be perfect, but it needs to be predictable. Self-employment and job changes aren't disqualifying, they just change the paperwork. What's your actual why? Do you want stability, a place to put down roots, a space you can genuinely make your own? Or do you value flexibility and mobility more than anything else right now? If you're trying to maximize mobility, renting makes more sense. If you're looking to lay down roots and build wealth over decades, buying, even at a premium, might still be your best bet. There is no wrong answer to that question, but being honest with yourself about it cuts through a lot of the noise that's out there. I had a conversation with someone not too long ago who was renting, and they really felt a lot of guilt about it, like they were doing something financially wrong. And I told them really straight up, given your timeline, your job situation, and where you're at right now, renting is the right call for you at this moment in your life. Come back in a couple years when things stabilize and let's revisit it. They walked away with clarity instead of pressure, and that's exactly what we want for everyone watching this. On the flip side, I've talked to people who kept renting year after year because the monthly numbers scared them, not because renting was the right decision for their situation. And they look back 5 or 6 years later genuinely wishing they bought sooner. Both stories are real and both really matter. At the end of the day, this is one of the biggest financial decisions of your life. It deserves a real conversation, not a generic answer that you're gonna find online. If you're sitting with this question right now and want to talk through your specific situation, I'm always happy to do it. No pressure, no addenda. Just honest look at your numbers and your goals. So reach out to me at 503-577-8853 or at joe@skipperrg.com. And if this helped you think about things a little differently, hit the subscribe button. We put this kind of content out every week for Oregon buyers and sellers and home owners. Thanks guys, see you on the next one.